Good morning. Welcome to Pries Capital. You must be the new recruit.
Oh, is this the new recruit?
Yes, it is.
Awesome. Follow me, Mr. Superstar. Here at Pries Capital, we love showcasing art. The stunning bronze dragon sculpture Kiko by the renowned artist Nano Lopez is definitely a showstopper. And these pieces on the walls, the legendary Michael Godard is practically a rock star in the art world. There's art all over the office, creating a vibrant, creative atmosphere to work in and collaborate in. And here is Tyler Pries, our hardworking mortgage loan officer. If you're looking to purchase real estate in the Myrtle Beach area, Tyler's the guy to know.
Looks like you have your hands full. Ashlyn, can you grab a book for him? And I'll see you at the meeting.
And here's Raj, one of Jason's right-hand guys for commodities trading. Good morning, Raj.
Good morning.
Meet the new recruit.
Hi. Hope you like to work hard and play hard. This is a high-stakes environment. Split-second decisions can make or break an opportunity. Welcome to the firm.
Don't worry about Raj. He's a quiet powerhouse, but he's critical to everything we do here. And here's the founder and real estate powerhouse herself, Tina Price.
Good morning. How are you? So glad to have you with us. Can't wait to see you in action. We're just about ready to start the meeting for Jason's market analysis. I will see you both in the conference room.
Good morning, Jason. This is the new recruit.
Hey, welcome. We're glad to have you here. Your skill set is exactly what we need. I love people dedicated to their craft. But hey, I got to get ready for this morning's analysis, so I'll see you in a bit.
Thanks, Jason. You're awesome. Right here, we have one of our many conference rooms. And down the hallway over here, we have the intelligent and sharp-eyed Miss Jill.
Why, thank you, Ashlyn. Nice to meet you.
Jill thrives in the world of spreadsheets, balance sheets, and financial forecasts.
You'll fit right in, so go check out your new office.
And here's your new office. And over here, we have some welcome goodies for you. Just a small thank you of saying welcome to the family. Okay, so I've got to get ready for the meeting, but check out the gym over here, grab some coffee and bagels in this room to the right, then I'll meet you in the conference room.
Good morning. Thanks for joining us. Go ahead, take a seat. Welcome back to another morning market analysis. Let's get comfortable and dive in.
This afternoon's trap could be a big payday with the FOMC. We've got a big day ahead. FOMC hits at 2 p.m. and the market is already showing us the roadmap. The charts are packed with ranges this morning, and if you've been with me long enough, you know how I love range conditions, which are some of the easiest, most forgiving environments to make money in. The blueprint is here, the traps are setting, and this morning has all the ingredients for a fantastic Wednesday session. Good morning and welcome back to another Team Day Trader edition of the Daily Market Analysis. Settle in, grab coffee, and let's prepare for today's trading session. As always, take a moment to subscribe and explore the links in the description below. Good morning, Earl. Good morning, Robert. How's everybody doing? Really quick, we're going to talk about the Fed, kind of going that. This might be a little bit of a longer one, morning analysis. I just kind of want to go a little bit deep into the Fed, things that I'm looking at and thinking through. That's really the big story of today. I mean, anything on the dashboard with Y charts, as far as commentary, the whole day is going to be revolving around the FOMC. We did get, the Mortgage Bankers Association, the mortgage applications, that came out at 7. I did take a look at that, and it does show a relative, right, and I'm thinking of rate of change terms. There is this like little bit of, and it's small momentum, but a decent pickup in purchase application. I'm not looking too big on I know there'll be a lot of headway on like refinance applications. I just still think that's still stuck a little bit just with interest rates. it's really going to be hard to get that refi, those refi applications to kind of pick up. So, I mean, I look at it, but the biggest thing that I'm looking for is our buyers, right? Our, there's 350 million Americans that live in the United States. There's roughly, I think between, and you could probably look, don't quote me, but I want to say between the ages of 25, I think it's like 25 and 54, there's like 118 million Americans. If we bring that up to like 18 to 62 or 64, I want to say there's like 150 million-ish, 42 million Americans, right, working. I'm just thinking like working population. And so when I'm thinking through that in my head, we all got to have a place to live, but are we moving? Is there transactions? My days of remembering the '08 recession, there was this major just kind of contraction in mortgage applications. And again, that's the first phase of, when you think macro, you need a permit before you start building. So looking at permit applications, those are big things. And then, the first thing that you really need as far as purchasing a house, right, is the mortgage application. So these are like leading indicators. So I'm always kind of keeping my eye on that. Obviously, the mortgage applications come out weekly. That you can look up and keep an eye on it as well. Again, that's a little bit of a leading. That doesn't have to, it's not anything big, nothing to talk about today, but, just every so often I just throw that in. I think it's important for people to keep an eye on. I find it amazing that doesn't get more attention than what it is. I feel like nobody talks about it, and I'm always watching that like every Wednesday at 7 a.m. In fact, I track it on my Excel spreadsheet. Good morning, James. Anyways, that I think is notable, just to kind of call out that for all these doom and gloomers or whatever else. I mean, maybe there's cracks, but it's still hasn't really shown. I think when you get on Twitter or X as it is nowadays, just so many people are in that finance world and you're stuck in that bubble. But if you just walk outside to every normal, everyday Joe and Jan, out there in the world, you're gonna find that conversation is a little bit different. And then, right, in aggregate, you can watch. There's some leading indicators, and again, I think permits, mortgage applications, those are the beginning stages of mindset changes in the aggregate. So anyways, that's a little bit of a rant, too long on that topic. Let's go to the Fed watch. That's it as far as the dashboard. There's not anything else to really talk about. We know there's going to be a cut today, right? We're going to go from 375, which is the current rate, to 375 to 4. We're going to go from 350 to 375. That's almost in the bag. You might as well, count that as a layup. So the biggest thing is going to be, what do we see for in the future? So again, we got markers, please. We got the one cut that we're bringing in today in the summer, right, of next year. We got a second cut that's projecting, and then market participants are getting in another cut towards the end of the year in 2026. So really, we got two cuts after today going into 2026, and then there's nothing in 2027, right? So today, that's the big focus point, is one, we get a new SEP, right? So in this SEP, if nobody has, what do I say? Anyways, brain fart. Sorry. If anybody has, can't think of the word. Went right past me. God, hate this getting old shit. Anyways, we are looking for this to change in the federal funds, right? So you had June projections. This is obviously September's SEP. And then what we're looking for is what is the FOMC looking into the future as we get, right? Is there any change? So in 2026, we kind of move into that 3.4, 27, 3.1. And does, in the longer run, we got a 3 handle. Does that change in today's SEP report? Another thing to keep an eye on is the dot plot, right? So does this dot plot, obviously this is 25, this is going to be not important anymore, but as we go into 26, you know, we can see this kind of thin layer where we got a decent amount of distribution up here at that 3.6 level, and then there's like this long thin distribution. And what we're really looking for is something that kind of widens out as market participants, like kind of the distribution gets thinner. Or I shouldn't say that, like, how do I want to say this? Like, when I say thin, I should say you want the distribution wider and short, not longer and thin. Right? So what we're looking for is more of a consensus where we get a distribution curve that looks more like this, and there's consensus here. I mean, not here at this level, but you know, the curve is fatter and shorter and not long and thin. And the other thing that I was thinking about the other day was what I really don't want to see, because of what I feel like, and again, this is qualitative analysis, which you know I hate, and I'm more of a quant than a qualitative guy. But there's kind of two different, I feel, groups in the Fed right now. There's the, you know, want to keep rates go slow and steady and keep them about where they're at. And then there's, right, and I don't want to say this in a negative way or, you know, or any kind of marks on Trump, but there is this, you know, Trump would like rates lower, and there's some market participants, right, that are trying to, you know, possibly play politics. Maybe not. There's obviously, it's speculative. You can't never put any, you know, proof to it. But what that will look like in the dot plots will have a distribution curve like this, where we're fat up here at around 3.6, 3.5, and then you're fat down here at like around 2, say 2.2, you know, 2.5, and we get this kind of dot plot that looks like this. And that, I think, will really give a curveball to the market, where we get these dots up here, you know, at around this 3.5 area, and then you get these dots down here in another distribution down here at around, like, say the 2s or the 2 2.25, and so then it's like two fat distributions, right? And you got two groups, and there's no really good consensus. I really believe that outcome would really disrupt the market. So again, I know I'm getting way ahead of myself, but I'm just trying to share my thoughts through this. Is, you know, how will this play out? Obviously, we're going to get this later today, and we're going to find out. But you know, thinking through all the effects, what would happen, possibilities, probabilities, and then third, fourth level effects off of those. This one I think would be the worst one for the market. And the best case scenario is, right, this just fattens up. You know, maybe you get one dot, and everybody's here. And then maybe 2 dots, and then 1 and 1. And then this just looks like a really fat distribution. And I really believe the market participants, right, that would kind of give clarity, really clear clarity of where we're going into 2026. So, right, that's what we're going to look for. That's what we're going to watch at the end of the day. And then the other thing that I really believe is something that's important, right? So that was page, right? So you got page 2 to look at, and you got page 4 to look at. And then the next couple pages that I think is important that I always look at, I skip a lot of the jargon, but I do come down here to page 10 where I'm looking for their assessment, right? The participants' assessment for the risks of growth, right? So you got growth, and then, which is on page 10, and then the next page is page 12. And right, so growth and inflation, right? And so where are their projections? You know, are they seeing less pressure on inflation, more pressure on growth? Are they speculating, you know, the information that they have, which again, right, we're just retail traders. I mean, yeah, maybe we got an in, or we got maybe somebody that we know, or a friend in an investment bank, yada yada. But these guys, right, they got really tight friends to, you know, almost everybody and anybody, political or corporate. And right, they get a little bit more information than what we get, and a little sooner, right? Rubbing elbows, going to parties with the who's who. And so I think they have a little bit better clue on the assessment of growth and inflation, a little bit better than us. We get it secondary information from them. And so that's what I'll be watching for is, you know, with the information that they have, what are they seeing in their risk to inflation? Does this step down and they're projecting less pressure in inflation? And then again, when it comes to growth, the indicators and things that they see, which is a lot of information, are they seeing growth, right? Here we had an expectation of growth here, and, you know, we see coming down the pipeline a little bit more growth, right? So I think page 10 and page 12 are definitely pages, you know, again, if you're going to summarize this, the SEP, and download it from the FOMC's website, I would just look at 2, 4, 10, and 12, and really kind of focus on those. So with that said, that's all that. I think we can erase that. We can get right into this morning's analysis. As of 7 o'clock when I wrote this market analysis, right, it is now 8:45, so there's been a little bit of change, right? But when I wrote this, just to kind of give you my thoughts at that time, that's why I write these down. The S&P 500 was negative 3 points. We're now at flat. When I wrote this, the overnight skew was negative 2.11% net short volume delta. That looks like it is a little, nah. I was going to say positive, but let me look at what that is. You know what? I've always talked about showing you guys how I calculate that. Let me show you how that's calculated. I feel like I make a comment and then we get going into the charts and then I skip it. So so this is recorded and anybody can come back. So the way that you calculate the net volume, the delta between long and short in the overnight session, and again, this is if you have Sierra charts. I'm sure if you have other platforms, but for me, I have Sierra charts, and again, I'll do a plug, right? If you want the same chart setups that I have on Sierra charts, right, you can go to the website. I usually don't like soliciting this shit, but I know if this helps somebody and you want to see the charts exactly the way I see it, and you want to set your platform up, I have my chart book on Team Day Trader's website where you can get all of my charts and download the chart book and then upload it to your Sierra Charts deck, and then you're gonna see exactly what I see on any given day. But as we go, as I'm looking at this, so this is the overnight distribution, and so you got total volume, and then you got the ask volume minus the bid volume, and that's this number here, right? And so what you're going to do is take the ask volume minus the bid volume, right? So AB volume, and then you're going to divide it by the total volume, TV, right? That's going to give you a number, and then you're going to times that by 100. Really easy formula. It's not super complicated, right? But then what that will give you is the delta between the positive delta and the negative delta, right? And so now these are then, you know, there's a slight skew, a moderate skew, there's a large skew. You get anything like 5 or 10%, which would probably be a gaps, where you get that like huge delta change, right? That kind of helps you understand, you know, as market participants come into the market, you know, is the skew in the volume, is more participants net short or net long, right? And so how do I want to say this? As price moves, which is just an advertisement number, right? People are positioned a certain way, right? And so if the boat is tilted one side, how do I want to explain this in a way that I can articulate so you understand? If there's a lot of people long and the price, which is the advertising mechanism, drops substantially, those people are off sides on the boat. And so you got to think of old business and new business. And so if you're long already and price starts going down, now you're off sides on the boat, or you're off sides, right? You're negative in your P&L, and you are going to have to, right, get rid of, you're going to have to take your old business and then conclude old business. So you're going to take that long, and then you got to get out of it, you got to sell it. Right now, if you start adding in new business of new sellers, on top of that, you have old business getting transactioned, which is you're selling. At the same token, you get actively new business of new sellers into the market that can make big moves, right? That's that kind of, that gives that inertia to like break out. And so recognizing the overnight delta helps you understand that as price moves during the regular trading session, right, how many market participants just in the overnight have to unwind their position, right? Which unwinding their position on top of new positions kind of gives that push. So hopefully I articulated it. If I didn't articulate it clearly, let me know in the chat. Call me. You guys got my phone. You know, most people, my phone number is on this feed. It's on the websites. And get a hold of me and we can kind of go into it in detail. But I know I've said I've wanted to talk about that a few times, and we never got to it. So since we're here, there, we got to it. Let's go back to the dashboard. Going to the dashboard. All right, we were opening out of balance there for a little bit. We were in balance, now we're back out of balance. So we're back out of balance, And then we have the current 10-day ATR sitting at 52.25 points. Again, I'm sure we have plenty of room for this market to double that range with the catalyst of the FOMC. So usually this kind of day, I'm anticipating usually like a 100-point move in FOMC days. I mean, that's psychologically, that's what I'm thinking is, all right, where does this thing have a chance to go, and where are we at 1:59 p.m. and, you know, say we're sitting at 68.48. There's in my head like, all right, this thing could easily go to 69.48, and it could easily go to 67.48, like just in my mind, or I'll take the high and low of that day and just kind of extrapolate like the possibilities. And so being that the 10 day is 52, you know, it could easily double. That's what in my head, that's what I'm thinking. The couple things what we'll look at, things to note this morning is I still remain that neutral inside of that range. We've talked about that now almost going on 2 weeks, like this week and all last week, is that range that we're holding into right above that. Let me change this color. Above that 68.1075, right? The buyers really from that couple weeks ago move up, aggressive move up. And then last week, that number, this just kind of just stays repetitive of that. As long as price is above that low volume node of 68.1075, there is this bias of being long, and right, there's a bias long in the market. Now, as we're day trading, right, this is neutral in, you know, technically, but on the hourly chart, right, there's still this bullish bias from that big spike move from a couple weeks ago. So still got that range. That tells us the hourly chart, again, reiterate, buyers still fully in control of momentum. The second thing I want to talk, you know, is obviously the FOMC. And then the third is we're sitting on a pair of ranges. Going in today, I'm leaning on day trade setup number 4. And then as the day shifts, I'm going to change the strategy into day trade setup 8. I'm going to be looking for, now day trade setup 8, I won't even be looking for that setup until the 2 o'clock. Like that day trade setup 8 is it's a momentum trending setup. So I'm going to be looking for, right, 2 o'clock comes, interest rate, and then how does the market reaction? How does tempo change? And if we get that kind of momentum push, high tempo trend move, then day trade setup type 8 is where I'm going to be trading between now or the open until, you know, basically probably 1 o'clock. I usually don't trade too much between that 1 and 2. It's kind of not worth it. This volume just dies right off a cliff. So that day trade setup 4 will be the early ends in the morning. As we look at key levels, again, that 68.1075, we'll look at that on the volume profile. On the downside move, this again 67, 65. If the news comes out and say it's not bullish, right, and say that whole spike in channel that we talked about is a failure, right, and we're going to look for then a move lower. We'll talk about that again, because it's if this happens, then this should happen, and if this happens and it doesn't, right, that's the you know, that should tell you something. That's the reflexive market coming back to you, and right, like anything else, like if you're right, you'll profit. If you're wrong, you'll lose money. It's, you know, very instantaneous and reflexive in a good or bad decision. So don't ignore those signals. Cognizant dissonance will, you know, is always a bitch. So with that said, let's get into the volume profile chart. Oh, that's great. Zoom it out a little bit. Right, we do have that spike in channel. I gotta change the color, right? Spike up. So on hourly chart, into that channel. Now we did break that channel the other day, right? And then we're looking for, right, that pullback. And you'll see on the trigger chart, when we get to the trigger chart, I'm looking for this, right, measured move down in here. This kind of comes into this area, which is exactly what we want, right? What is it? Yesterday or 2 days ago? I don't know. Whenever I talk to you guys, right, how do these spiking channels play out, right? They rotate and then they break down and they come to the base of the spike and then break out. So we've pushed up. That 68.10 is the level. We've been watching that forever now. We're in this distribution node, right? If it's gonna hold and we're moving higher, I'd like to get the two, you know, an AB equals CD correction. Is a way to explain it. Another way to say it is a measured move pullback, a two-legged measured move pullback. Either way, that confluence ends up being around 68.10, 68.03 to 68.10, 75. So say this kind of chugs a little bit lower as we open up, and then 2 o'clock comes, they spike it down off the initial reaction. You get a little spike, and then, right, a little tail, and then they bring it up, and then we start marching higher. That's how I'd like to see play out as, again, day trade setup number 4, and then into day trade setup number 8. It's kind of that's the picture that I'm looking for in a realistic trading sequence into today. The caveat, like I talked about, is on a failure of this pattern, right? So if this fails and you get into here and then it pops up, say the FOMC comes out, it's 2 o'clock, you get a pop up and then a failure and they break below this 68.10, like boom, that's it, right? And you get that failure underneath, they're going to take this whole move, and this will come all the way back. Now, this isn't going to come all the way back to 65.40 in one day, right? But if this level breaks and this pattern fails, right, and the FOMC rate decision is the catalyst, right, and this breaks down, right, we'll have a pit stop here, and then we got this distribution here. The developing point of control is 66.70. And again, today's Wednesday, so we'll have Thursday and Friday, and you could see us unwind, you know, by Friday, Monday, where we unwind this whole move, and it comes all the way back down into 65.20. We'll have to watch, you know, we'll watch and play that as it happens in real time, day to day. But I'm just kind of, right, giving you, so if you're long and you're wrong, like, don't fucking hold that thing, because, you know, this pattern breaks and there's a high probability that it, you know, we just rotate all the way back down to the beginning of the spike, which sets us down to 65.40, 65.20, right? And so holding something at 68.40, or give or take, even if you kind of got in that low at 68.10 and you're wrong, and we bust through that LVN, I mean, that's a bad week. Turns into a bad month, and, you know, just a bad trade. Like, get out and flip. So with that said, we talked a little bit about this chart already, weekly profiles. We looked at that. I don't think there's anything much, right? Again, we're kind of in last week's value, right? So here was last week's value. We're inside of that, really right in the middle of it. So we're sitting right in that middle of the value from last week. Again, range, right? Range rotation. And then again, we're looking for that pullback into, really, the number is 68.03 to 68.10 in 3/4. And I'll show you why I say 6803. I'll show you where that number comes from. But this, so again, this could, this is where it'd be the juicy inflection, point that I'd love to buy that and get a nice hold on that. We'll have to see if that gives us an opportunity. FOMC, anything's possible. So, put limit orders in, make sure you put your stops in, and don't let this go away. But if there's a chance to get in, right, I'm getting in. You can do whatever you want. This is not financial advice whatsoever. Let's look at the trigger chart. We'll close on that unless anybody's got something they want me to look at. But again, this is that trigger chart. So we already know where the 68.10 and a quarter lies, right, in the LVN, looking at chart 2 from the volume profile. And then this is that 68.03. I don't know if you guys can see that on your screens. But that is the 100 two-legged pullback, right? So AB equals CD, right, where we get that two-legged pullback in the equal leg. So this leg equaling this leg. That takes us all the way down to 68.03 from yesterday's high. Right? So if we make a high, a low, and then we make an equal high and low, that takes us down to 68.03, right? So two-legged pullback, equal measurements, right, for all of my Elliott wave traders, right? So Elliott wave traders as well as Fibonacci and market profile all in one, right, confluence. That sits us down at 68.03, 68.10 and 3/4 is that LVN. We're again opening up day trade setup 4. I'd like to see this thing, still migrate down. It'd be nice if you got like a little bit of a liquidation break, got down in here early in the market. That would be, right? If there was trading gods, that would be the gift. That would be the Christmas gift. Early Christmas gift. Sit down here early in the session more than later in the session. Because what I hate to see is this just gets stuck in a range here. Even if we do take out this low and we kind of get down into 68.29 area, that would kind of really suck. And then really the only time you get this is 2 o'clock comes out, right? All of a sudden the algos get flipped on and, flipped off. And then that thin trading then they get flipped on. And you get that, that break, that wick way down, and then it comes right up. And, you gotta, you just almost have to have a resting limit order down there and get snagged. So that will kind of, if that's the way it happens, that's the way it happens. I really don't like those setups. Those are kind of more of the frustrating. Again, on a spectrum, when I think of trading being easy, trading being hard, right? This setup where price at 2 o'clock is sitting around 68.30, we'll just call it, and then 2 o'clock hits, and then it shoots down to then shoot back up, and you got a limit order on here, and that always seems to be like a harder trade than if it was early in the morning. We march down here, get down here by 11:30, be able to get a 2-try, right, setup down here, 2-try reversal setup down here, a little bit more confidence that that's going to hold, right? That's going to be a little bit easier of the trade going into the FOMC at 2 o'clock than the other scenario I gave you. But, either way, this is the level that I'm watching hard, and it would really suck if this never even touched it. And we only got, a 2-legged pullback down into here. That would make even the trade even harder on that spectrum. That would be like right up, button up to the hard level on the spectrum. But nevertheless, we have to work with what we're given, and we'll have to see how the market presents. But that's how I'm looking at it. If this thing just falls apart, right, then, right, more than likely what will happen, and I'm just going to tell you, I'm more than likely going to take a long trade. I'm going to try for this level. But say it doesn't work, I'll get stopped out. I'll have to take a loss, right? Because I'll have a stop in play. And then this thing rolls over, and say rate decision comes out. Say the market is semi trying to hold up, and you're getting a little bit of, you know, good volatility in here. And then he comes up on stage, he starts talking, jabbering his jaw, and nobody likes what he says, and this thing just falls apart. Again, we talked about this thing just falls apart, then we know we're going all the way back down to, right, the beginning of the spike. And then this whole level inside here, this range, that distribution, where we change into, right, the couple distributions down here, and we just rotate. We're going to rotate all the way down. So if that's what happens, then we got to play that. This will get, I'll have a loss right in there, but then, right, that'll just tell me I got to flip to short, and then I'll have to enter into a short position as on a longer time frame, right? I'll be analyzing the market and looking for this 65, targeting 65.50. Definitely this open VPOC that's down here, targeting 65.70. So we all know if this thing rips up, and we know if this thing rips up, we already know, right? We're targeting the all-time high, and then we'll have to then gauge past that. We're in open black space above the all-time high, and so then we'll have to take every day by day using market profile theory to really kind of lead us into how we'll trade one day to the next whenever we're in open territory. So yeah. So that's how I'm trading it. That's what I'm looking at. Yes, James, early Christmas present. That would be nice. Hey, who doesn't like early Christmas presents? Why wait? Just give it to me now. Anyways, yeah, nobody's got anything to look at. Still sitting on that crude trade, FYI. Not liking it. I kind of feel like the last couple of days we were trading at $60. Now we're trading down at 58. I think I'm pretty sure well, in fact, I don't want to say pretty sure. My trade location from, right, getting in, getting out, getting in, right, getting out, and kind of trading CL in and out. Right now I'm dollar cost average at 57.75. That's where I'm at. And then I don't have a gold position on or a dollar position. And then, like I told you guys the other day, I have a milk futures trade on, right? So I am trading /EC, and I am trading milk, and I have a long position on at 15.21, somewhere around there. So right now I'm in the good. I like this. I like the way that this chart on milk futures is setting up. So I like this kind of trap down in here on a weekly, but I like this price action. Really what caught my eye on this chart was this day chart. Let's open this up. So what caught my eye was this hammer tail the other day, and then I got in down on this day here as, right, holding that low. And then I did take a little bit of heat on Monday, and then yesterday it kind of recaptured, and then we're opening up at 15.38. And right, this is that two try, right? One try, two try. I'm out underneath 15.50, as, right, I'm just looking at this as like, again, day trade setup. 15 is the 2-try reversal. And then I'm looking for milk to make a march up. Right? It'd be nice to get up in here. You know, I don't get greedy with this. I'm just looking at something in and around the $16.80 to $17. We get back up at the top of range. Right? So usually when I'm commodity when I'm trading commodities, I have a bias of trading commodities where they trade in a range, right? So usually my back testing, the higher probability of commodity trading is the juicy trades and the easy trades. Again, spectrum, easy, hard, that's horrible H, hard. Whenever I'm trading commodities, right, you never get like a commodity shooting off like an equity. Right, this isn't NVIDIA, and right, we're growing revenue, growing shares, or growing right, revenue and sales. Commodities, right, like nobody's gonna go to the grocery store and pay $100 for a gallon of milk. So what happens in the commodity world is commodities will just usually trade in a band, and it's usually a range. So, you know, when I saw milk down here at $15, you know, just looking at this easily trading into a band. So anything getting up here, and again, you're trading futures, so you already have that leverage component to it, which makes it really juicy. And so getting up to 16, 17 bucks, and then playing that. So yeah, anyways, that's a little bit of how I'm trading it, how I'm playing it, what I'm seeing. Very stupid simple. Usually when I look at anything other than the S&P 500, I don't get anything. I kind of go with lower size, usually 1 or 2 contracts, even in gold, even in crude. You know, for anybody new watching, most people know when I trade the ES, my average contracts trading in the ES is usually 4. You know, that's kind of, you know, say a band of 2 to 6, 4 being my happy medium. And then, you know, during certain days or volatility, sometimes it's 1 to 2 and sometimes it's up to 10. You know, but my average is usually 4, my comfortability level, 4 contracts. And then when I'm trading anything other than the S&P 500, crude, soybeans, you know, milk, any of the metals, you know, gold, silver, palladium, platinum, anything other futures, managed futures that I trade, it's like 1 to 2 contracts. And but what I do is I give myself a lot of more room. I don't get down to 5 minutes. I'm usually trading on a day chart and an hourly chart. Hourly chart would be like the fastest time frame, because I usually give myself a lot more room in the trade. Right, like I said, you know, when you think of like a day chart and the amount of room, like a day chart candlestick is different than a 1 5-minute candlestick. So right, I give myself a little bit more room. So anyways, just kind of giving you my thoughts, giving you my flow, how I trade. Anybody new, most of you guys, James, Earl, you guys should know. Robert knows. Henry, I know he knows. There's people that I know on the stream that I've mentioned. Most of those guys know. They've been trading with me for a while, so they know how I trade. But anybody new comes to it, you know, there's me sharing my thoughts and how I trade. Not really my thoughts, but I'm just trading, telling you how I trade. So anyways, if you guys want to stop by the office, shoot the shit, any of you guys in Myrtle Beach, if you're visiting, vacationing, if you live here, the address, here's our company phone number in the office. Anybody who gets to know me personally, you guys got my cell phone number. This is if you're trading, that's the trading email. Don't send trading questions to Pries Capital. The girls won't know where the hell that email comes from, and it probably won't get to the right people. If you're trading, send it to info@teamdaytrader.com. If you're trading and you want more resources, teamdaytrader.com is the resources for day trading. That's the division, the trading division off of Pries Capital. And then priescapital.com is private equity, real estate, investment research, portfolio construction. That's the information for that. So that's right there for anybody's information. I'm an open book. Like a high-level daily summary showing trend analysis. Appreciate it as always. Yeah. No problem, bro. You guys have a good day. We'll find out. We'll have a lot of information tomorrow. We'll go over those SEP just a little bit. The difference of any language. And anybody who's close by, you guys want to watch the presser with me, right? We have TVs in the office. And we usually watch it. So anybody's always welcome to come to the office and we watch it here. I'll be watching it. So watching and trading at the same time. You guys take it easy. Have a great day trading. As always, learn, trade, profit, and I'll see you on the other side.